Greetings, folks. John Grace, President, Investors Advantage. The Money Doctor is in. Want to look at all of the geopolitical events that are taking place, not in terms of looking at them in particular, but looking at the events that may cause another shock and awe to happen again. Now, that sounds like a movie, and maybe this is Shock and Awe 3, because you've been through Shock and Awe 1 and then Shock and Awe 2. You might recall Shock and Awe 1 was the first time you saw your reversal of fortune, where the Dow and the S&P were off about 37 to 50% in a first 2-year period, 00 to 02. And so what that means is if you had $1 million, let's say in January of 2000, by year end 2002, your $1 million was worth about $666,000. Most of us suggest that you buy and hold, and most investors did. So at the beginning of 2008, we can see that what was $666,000 grew to about $1,100,000. And lo and behold, we wake up to Shock and Awe 2. By year end 2008, a 37% decline takes that $1 million to about $684,000. Again, the buy and hold crowd, very happy to see that as of 12/31/2013, what was $684,000 gets to be north of $1,300,000. So this has worked out really well. Thankfully, there have been 2 good years that helped, 03 and then 2009. And secondly, there were no withdrawals. So we're going to suggest this. When you look at many financial advisors, we suggest that you look at the averages and you hope for the best. We'd rather you look at the worst case scenario and prepare for the worst situation, and then it might work out for you. If you own a beautiful home in Malibu and there's a 7.6 earthquake off of Catalina, what would you prefer? Would you rather be a statistic and people get to talk about you and what you lost? Or would you rather be able to tell your story? Certainly, we'd like for you to tell your story. We want you around to stay in the game and be able to see what you can do so that you can continue doing what you came here to do. So, if we go back and take the same scenario, the only thing we change is starting in January of 00 with $1 million, and we just set it and forget it, kind of like what the central bankers would like for you to do. Just make it mechanical and believe that the machines can do everything that they need to do on your behalf, not revisit our assumptions or our thinking or look at the real world. Take $40,000 out a year. And after that first reversal of fortune, by year in 2002, we're south of $600,000 with 2 withdrawals or 3 withdrawals from 00 to 01 and then again in 02. And then the account has some good gains in there, and then we discover, oh my goodness, if we're paying attention, by 2010, what was $1 million after taking out $40,000 a year and seeing the volatility in the markets, now we're below $200,000. And then by third quarter 2010, the account is a goose egg. It's gone. All the money's gone. All of your options are gone. That would not be my idea of fun. So what am I suggesting? You know, we like writing prescriptions, and we have 3 of them for you. The first and foremost one is stop trying to save at the end of the month. Start saving at the beginning of the month with 15% of what you earn every month from now on, just like clockwork. If you're not going to do it, who's going to do it for you? Take that responsibility. Secondly, look back to see what you could have learned in 00 to 02, in 2007, 2008, where there's some places where money could have been made, where there's some ways where the losses could have been reduced. Those would be good questions to ask, because if there's another reversal of fortune, let's say this time it's 80%, you know, that means $1 million with no withdrawals is suddenly worth $200,000. And if you take out $40,000 a year or ever again, that $200,000 will probably never be back to $1 million. So let's go back to see what we can learn from the experiences that we've had. And finally, stress test your portfolio. Look backwards as well as look ahead to see where might there be some surprises in the equation, and how can we diversify unlike we've ever diversified before. So with that, John Grace, the Money Doctor is out.